Good morning, students. Welcome back. So today we are going to discuss this new chapter, which is about audit report. Actually, it's about various auditing standards. We can say that we are going to cover now in respect of the reporting requirements which the auditor is required to consider. And when it comes to the audit report or the reporting requirement, you can say it's the final stage, or you can say it's the wrap up. Yeah, because eventually this entire audit is conducted for what? That is for the purpose of audit report. Okay, so eventually it's the audit report which is required to be issued. Yeah, so that's the outcome which is required to be looked at. In fact, if we look at the deliverable which goes from the auditor to the auditee, of course, during the course of audit, you can say that audit services are being rendered. But as far as the deliverable is concerned, audit report happens to be the only deliverable which will be given by the auditor to the company. Yeah, so that's why you can say it's the document, or it's something which the management would wait for. So that's why this audit is performed, right? So in relation to this audit, let's try to understand as to what are the relevant auditing standards that we have. Okay, because that's again a very important part, because we are not talking about one auditing standard. So we have various auditing standards dealing with this. So when you talk about SA 700, it talks about audit report in general. In general means various elements, the structure, the layout, everything which you have in the audit report. Yeah, largely you can say it talks about those aspects of the audit report which are required to be included and which is focused on the clean audit report, or you can say wherein there is no modification. We'll talk about as to what is modification as well today. Then we have this SA 701, which talks about one very specific aspect of the audit report called as CAM, key audit matters. Okay, so over here, what is it that we are required to look at? Specifically CAM, key audit matters. In fact, what we will also do is we'll just try to look at one audit report, okay, one actual audit report to get some more clarity around some of these elements. Then we have this SA 705, again, a very important auditing standard which focuses only on the modifications. Okay, so what are the modifications? What are the types of modifications? Why the modification is required? All of these aspects are covered by this auditing standard. Sometimes it may happen that the auditor doesn't want to modify the audit report. Okay. But there are few areas which the auditor wants to highlight. Means he wants the users or the stakeholders to focus on that. Okay. And that is where some of these requirements called as emphasis of matter or other matter paragraph are included in the audit report. So we have this auditing standard as 706, which deals only with these two aspects. Okay, so we can understand that there are different auditing standards which are focusing on some specific requirements related to the audit report. Yeah, so we'll talk about all of these. Now what we can do is we can just quickly look at the audit report. And when we say audit report, so you can say it's a structured format. Okay, so when you look at the audit report, what is that? It's a structured format. wherein the contents, the various contents that are required to be included are also kind of fixed. Okay, and the order of those areas or the relevant content which is required to be included therein is also fixed. Okay, so there is a proper order in which you'll have to provide various, or you can say various topics which are required to be covered therein. So currently on the screen, the various contents that you look at are what? These are the contents. You can say these are the various elements of the audit report that you will get to see. Okay, and in this particular order only: title, addressee, auditor's opinion, basis for opinion, then of course a lot of other requirements. Yeah, so this I would say is a good summary in terms of various requirements related to the auditor's report. Okay, now moving further. Now we are talking about SA 700. Okay, which basically lays down the format. Okay, this format that we discussed, and it provides the guidance as to what is required to be included in the audit report. Okay, now all of these elements that we discussed, we'll try to understand all of these one by one. Okay, and for doing this, as we discussed, what I'll do is I'll pull out one actual audit report. Okay, because that will give us the complete clarity of various areas which are required to be included therein. Right, so you should have title to begin with, then the addressee, means whom do you address the audit report, right? And then you have the auditor's opinion. Yeah, so all of these things we'll try to understand that by looking at the actual audit reports. Let me just move on to the audit report now. I'll just share the document now. Okay, so here we go. So we have this audit report, right? To begin with, as we discussed, what will you have? Title. So it's the independent auditor's report. Yeah. So now this is again a very standard title which you will see on every statutory audit report. Now, please remember, the audit report that we are discussing here is the statutory audit report. Depending on the type of audit report, some of the statutory requirements, okay, some of the content therein may change. And of course, at times some of the elements may also change. Okay, so you'll have to look at the relevant statute. So currently we are looking at the report which is required to be issued when we audit the financial statements. Okay, now who do you address this to? To the members of the company. Okay, so what does it say? To the members of the company. And then you have this subtitle. What is that? It's a report on the audit of the standalone financial statements. See, in terms of audit report, one thing that you'll notice as we'll move further, this audit report will talk about each and every element in detail. And even if you look at the audit report, some of the very basic aspects will be put down specifically in the audit report. Okay, for example, one may think that if, let's suppose, this title is given independent auditor's report, right, then why there is a need to include this subtitle again? Is this not understood that if it's an audit report, it will be the report on the audit of financial statements? No, because as we discussed, each and everything in the audit report is required to be very clearly, very specifically laid out. Yeah. So we should not be making assumptions. Okay. So to make such assumptions in the audit report may not be appropriate. Right? Now, moving on to the opinion. See, the audit report will always begin with the opinion of the auditor. Why? Because eventually in the audit report, what is it that the user would want to look at? It's the opinion. Yeah, you can say the final outcome. Of course, there are a lot of other ingredients which are important for one to understand, for one to look at. But this happens to be the most important one, okay, which talks about the opinion, right? So now, in the opinion section, let's understand as to what is included. Now here again, you will notice the same thing, that before talking about the opinion, see, opinion is what? Auditor will comment on the truth and fairness of the financial statements, okay, whether they are free from material misstatement or not. So this is what the opinion will talk about. So before you actually get on to the details of the opinion, you may easily find out whether the opinion is modified or not. How do you do that? Okay, through this header. Okay, now what is the header? Opinion. See, if the opinion will be clean, unmodified, then what is the heading you will use? Opinion. If it is modified, you will use, say for example, if it is qualified, so the header will be qualified opinion, or adverse opinion, or disclaimer of opinion, right? So looking at this heading, one may easily find out whether the opinion is clean or not. So don't need to read that. Of course, we need to read that, but it's like one can easily find out even without reading the para whether the opinion is clean or not. Okay, so that's one part to it. Number two, before we move on to the opinion, auditor will now clarify some of the things. Okay, so let's read this para. This will give you complete clarity. So over here, the auditor says, we have audited standalone financial statements of the company, which comprise balance sheet as at 31st March. Okay. And P&L, statement of changes in equity, statement of cash flows, notes to the financial statements, including the material accounting policies and other explanatory information. Okay, so now in this case, if you'll notice, auditor didn't jump on to the opinion straight away. First of all, he has given the context. And then the auditor has also explained that what is it he has done. Okay, so he has given the reference of the financial statements in a way for the year. Okay, so in that context, one should read the opinion. Now, In the second para, auditor is now talking about the opinion. Okay, now what do you have? It says, in our opinion and to the best of our information and according to the explanations given to us, aforesaid financial statements, aforesaid means the one which are referred to, give the information required by the Companies Act in the manner so required and give a true and fair view in conformity with accounting principles generally accepted in India of the state of affairs of the company. So now he is talking about all the elements which he has audited. When he says of the state of affairs of the company, what does it mean? Balance sheet. Its profit and other comprehensive income, statement of P&L. Changes in equity, statement of change in equity. Its cash flows means he is talking about statement of cash flows, right? So now, while giving the opinion, here again, auditor is specifying each and every element of the financial statement. Okay, that he has covered each and every aspect here, right? So you can understand that audit report will not be using a generic language. It will be using a very, very specific language wherein each and everything is clearly laid out, right? Now, once the opinion is given, so what does the auditor say? Auditor says that yes, report is clean. Why? Because financial statements reflected true and fair view. Okay, now, once the opinion is given, what is the next requirement? One should specify the basis. Yes or no? One should specify the basis, means what is the basis for this opinion? Correct? Now, in the second part, okay, I'm calling this as second part, means when we move further after the opinion para, what do you have? Basis for opinion. Okay, so now the auditor talks about basis for opinion. So now the auditor says, we conducted our audit in accordance with auditing standards. Okay, so he is also referring to the relevant act as to where are those auditing standards specified. Okay, then he says, our responsibilities under those auditing standards are further described in auditor's responsibilities for audit of standalone financial statements section of our report. We are independent of the company in accordance with Code of Ethics issued by ICAI, together with ethical requirements that are relevant to our audit of financial statements. And we have fulfilled our ethical responsibilities. Okay. So now over here, auditor is saying that we conducted our audit as per the auditing standards. We are independent. Ethical requirements have been taken care of. Now, he's including the most important part. He says, we believe that the audit evidence we have obtained is sufficient as well as appropriate to provide a basis for our opinion. Okay, so he has clarified that the opinion which he has shared, he has got the required evidence for that. Okay, but this required evidence is as per the requirements of auditing standards. Okay, now after the basis for opinion, we have this next section about key audit matters. So we'll discuss about key audit matters in further detail slightly later on, right? So I'll just skip this next section, key audit matters. Next, moving on to the next part, other information. Okay, now what do you mean by other information? So let's understand this. So if you read the first part, it says companies management and board of directors are responsible for other information. So somewhere what do you understand that some information is being referred over here. Now we don't know what information is that. So that is what is again clarified and specified. So it says other information comprises information included in the company's annual report, but does not include financial statements and audit report thereon. And this annual report is expected to be made available to us after the date of this auditor's report. Now, in this case, let's try to understand about this other information. Okay. Now, when you talk about this other information, see, it's that information which is different from the financial statements. What is the requirement for the auditor? To audit the financial statements. That's it. Other than the financial statements, the management may have a lot of other financial information. Okay, forget about information, a lot of other financial information. Now, is that also required to be audited? Answer is no. Okay, means no separate audit is required. Anything which the auditor would have covered will be the part of the audit, right? Now, in this case, when there is some other information which goes along with the financial statements, okay, say for example, if I have to, let me just share the working file. Let's try to discuss that. Now, this is again an important aspect to be considered during the course of audit. Now, say during the course of audit, this is the financial statements. Okay, so this document is what? It's the financial statement, right? Now, along with this financial statement, if let's suppose there are some other documents which are provided to the user. Now, why do we say it is provided to the user? Because there is one document called as annual report. Okay, which will have various information. And financial statements again happens to be one of that information, right? And all of these different informations put together, what do you call that as? You call that as annual report. Okay, so now it's the annual report wherein all of this information is put down. Okay, so now let's think about the user. See, when the user will access any report, what will happen? He will pull out the annual report. So if let's suppose you have to read the financial statements of a company. So what do? You will go to the website of the company, or maybe let's suppose you will search it. So what will you find? Annual report. can we say annual report is the financial statements? No. Financial statement is one of the document which is included here. Now, in this report, in this annual report, there are a lot of information which is included. So if let's suppose user is reading the financial statements, and along with that user also gets to read, let's suppose another document say called as MD&A, Management Discussion and Analysis. Or let's suppose there's another report called as, it's the director's report. Now, in the financial statements, what will happen? In the financial statements, somewhere over here, revenue would have been reported. Correct? Revenue would have been reported. And let's suppose somewhere over here in the MD&A, there is a discussion as around sales. Somewhere in the director's report, there's a discussion around sales of the company during the year. Now, if let's suppose revenue number reported in the financial statements is X, and let's suppose in these two documents it is X plus 1. X plus 1. So the user which is referring to this annual report, okay, who gets to see the information of the same company for the same financial year being reported in two types of, you can say, documents differently. So what will happen? That user will get confused. Yes or no? That user will get confused as to what is happening. Number one. And what is right, what is wrong. Because user doesn't know that this MD&A may be wrong, director's report may be wrong, or maybe the financial statements may be incorrect. Okay, so the user doesn't know. Or maybe the numbers which are reported, okay, may want to convey something different. Right? And as a result, what will happen? The user will not be able to rely on the financial statements. Okay, so that trust factor will become a problem. Yes or no? Yeah. Now, how do you manage that? How do you bridge that? Do you go as an auditor and audit all of these other information as well? All of these other information? Answer is no. You don't do that. No, you don't do that. And is that something which is expected out of you? Again, no. Right? So that is not something which the auditor is required to do. So let's understand now what is it that the auditor is required to ensure. See, the auditor is only required to ensure that the information at two places. Two places means these two documents that we looked at. If both the documents are maybe put together or they are available in a combined manner, okay, wherein the user is not only getting access to one document but the other document as well for the same period, for the same company, then at least the numbers should be consistent. Yes or no? That's the most important part. Yeah. So as an auditor, what's the expectation? That at least the consistency should be there. Okay, that consistency should be there in the numbers. Okay, which are reported at two places. Now that's important, right? So now let's understand as to what is the auditor doing here. So auditor has first of all clarified what is other information. Now this other information may not be standardized. So one needs to look at, of course, there are a lot of other information which is quite common year on year in terms of what is getting reported. But again, it will depend on the requirements and the applicability on the company as to what is the other information which they are required to report. Okay, at different places. So that's one. Okay, now further, the auditor has clarified over here. Now, if you look at this, auditor has clarified. He is saying that this annual report, which comprises of this other information, that has not been made available to me till the time I am issuing the audit report. So can I do the consistency check? No, I can't do that. Right? So I can't do that. Further, he says, our opinion on the standalone financial statements does not cover other information. So he is clarifying that the user should not expect that we are also auditing the other information. No, we are not doing that. And that's why he's saying we will not express any form of assurance conclusion thereon. Means on the other information. Right? Then he is also clarifying as to what is it that he was required to do. He's saying in connection with our audit of financial statements, our responsibility is to what? Read other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements, or our knowledge obtained in the audit, or otherwise appears to be materially misstated. Yeah, because in a way, this is also a kind of information which the auditor needs to have in place. Okay, which will also give the clarity. And as an auditor also, he would want to ensure that the consistency is there. Okay, he may like to understand if, let's suppose, there's a particular item getting reported with different amounts at two places. Say in financial statements it is X, and let's suppose in some other information it is Y. So why there's a difference? So this is important for the auditor as well. Yeah, which he would have done which he would have done. But if let's suppose the relevant information is not available, then he can't ensure the consistency, right? Only when this other information is made available to him on time, that's what he'll do. Now practically, if you look at the companies, when do they finalize this other information? Once the financial statements are audited. Okay, so this is a very common practice. So therefore, what is it that the auditor will do? They will generally look at the draft document. Okay. See, in case of some companies which have got good financial reporting mechanism, they will have at least a draft version of this other information available at the time the audit is going on. Because of course, its finalization, its closure will take some time. And only when the numbers are frozen, that information also gets frozen. Yeah, but at least at a draft level, that information is available, which the auditor can always look at and read, right? Now, this was about other information. Okay, now moving further. Now, what do we have? Now, the auditor will talk about responsibilities of the company, means the management, TCWG. Okay, that is the board of directors. See, this section is important because what may happen is user may not get to know as to what is the role, what are the responsibilities of the auditor. User may think or user may assume that something which the auditor has done, of course it's there in the audit report, but something which he has not done, so the users may assume that auditor has done even that work as well. For example, by looking at this audit report, okay, so far the sections that we have looked at, users will get to know that of course auditor has audited the financial statements, no doubt, but what about its preparation? Okay, who has prepared the financial statements? So there could be a confusion, so the users may think auditor has prepared that, which is not true. So if you look at the preparation of the financial statements, in fact, if you look at these financial reporting requirements, if you look at the control mechanism of the company, whose responsibility is that? Management. So who should have done that? Management, right? So now in this particular section, auditor will now in a way clarify as to what is it that he has not done as regards the financial statements. Understood? Of course, there's another section wherein the auditor will talk about his responsibilities. But by putting down the responsibilities of the other party, okay, so that sort of ambiguity will not remain, right? So that sort of element will go away. Okay, so let's look at this. The company's management and the board of directors are responsible for matters stated in Section 134 of the Act with respect to preparation of the financial statements that give a true and fair view of state of affairs, profit and loss, changes in equity, cash flow, right, in accordance with the accounting standards. So who is responsible for that? Company's management and board of directors. This responsibility also includes maintenance of adequate records in accordance with the provisions of the Act for safeguarding of assets of the company and for preventing and detecting frauds and other irregularities, selection and application of appropriate accounting policies, making judgments, estimates that are reasonable and prudent, design, implementation, maintenance of adequate internal financial controls, whether those were operating effectively or not, right? So all of these aspects, who is responsible for that? So it has clarified, I am not responsible. It's the management who has done that. Okay. So as regards the going concern assessment, who is responsible? Management. Board of directors is also responsible for overseeing company's financial reporting process. Okay. Now, moving further. Now comes the section wherein the auditor is clarifying as to what are the responsibilities on his part. Okay. So now comes the objectives in a way of the audit. So he says our objectives are what? To obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement or not, and to issue auditor's report that includes our opinion, something which he has already done, okay, in the previous section, right? Then now the question arises, what is this reasonable assurance? Because somebody may think, okay, may not have a clarity as around the reasonable assurance. So he says reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with SAs will always detect material misstatement. Now, what is a misstatement? Again, he has clarified. So he says misstatements can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence economic decisions of the users. Okay, yeah. So you can just understand that each and everything in the audit report is explained, clearly laid out. Yes or no? His responsibility is reasonable assurance. What is reasonable assurance? What is materiality? Okay, what is misstatement? Everything now is clearly laid out in the audit report. Okay, now does the responsibilities end here? No, there are a lot of responsibilities on his part which he will put down. Okay, so if you'll just look at this particular section over here, he will clearly laid out all the responsibilities. Okay, so identification, assessment of risk of material misstatement in relation to audit of the financial statements. Okay, obtaining an understanding of internal control which is relevant to audit. That again he has done. Evaluate the appropriateness of accounting policies. That again he has done. Conclude on the appropriateness of management and board directors use of going concern. That again he has done. Okay, evaluate the overall presentation structure and content of standalone financial statements. That again he has done. We communicate with those charged with governance. Okay, so he is also talking with responsibilities. So he says we communicate with those charged with governance regarding planned scope, timing of audit, significant audit findings, significant deficiencies in internal control, right? Then he says we also provide TCWG with a statement that we have complied with relevant ethical requirements regarding independence and to communicate with them all relationships and other matter paragraphs. Okay. Then he says from the matters communicated with TCWG, we determine those matters that were of most significance in the audit of financial statements. Okay, so he's also talking about a particular section called as CAM that we'll talk about, right? What is CAM? Then he explains, we describe these matters in our audit report unless law or regulation precludes public disclosure about the matter, or when in extremely rare circumstances we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh public interest benefits of such communication. Okay. Then report on other legal and regulatory requirements. Now, moving on to this section, Now, what has happened? See, if you look at this audit report talked about the opinion, which was in relation to what? Financial statements. And then there was some other information which was, you can say, sent along with the financial statement. So the auditor ensured the consistency check. Now, in relation to the audit of the financial statements, auditor would have performed a lot of procedures. He would have examined various types of information. There are various areas he would have looked at, right? Now, in relation to certain areas which the auditor would have verified, okay, means for certain information he would have obtained, there is a requirement. You can say there is a requirement as per the Companies Act that the auditor needs to put down specifically as to what is it he has done in respect of those areas or those requirements. It doesn't mean that these are the only areas auditor needs to audit. Others he can skip. No, that's not the thing. See, these are some fundamental requirements. Okay, very important requirements which the regulator wants to know. That's why the regulator wants auditor to specifically put down some of those points. Now, where do you get to see these requirements coming from? From the various regulations. Okay, and one of those regulation happens to be the Companies Act. Okay, so now in this case, the first requirement is that of a, you can say, a kind of checklist. I'm calling this as a checklist, but this is not a checklist actually. Why do we call this as a checklist? Because somewhere there is a requirement in relation to some points that the auditor has to specifically report on. See, it's not about that only if there's an observation auditor will report. No. Whether there is an observation or not, auditor needs to comment on each and every point which is covered by that regulation. Now, where does it come from? It comes from section 143, subsection 11 of the Companies Act. Okay, which is very commonly called as CARO. Companies Auditors Report Order. Okay. And you can say because there are a lot of requirements which the auditor has to comment on. So that's why what we generally do is we make this sort of checklist as an annexure to the main audit report. Okay, so the audit report that we are looking at. Now, in this audit report, we will not put down all of those points one by one. Otherwise, this report will become too lengthy. Okay, and it may become slightly confusing. So that's why, what do? We put down those points in the form of an annexure. Okay. Like if you read this para, what does it say? As required by Companies Auditors Report Order 2020 issued by the central government in terms of section 143 subsection 11. We given annexure a statement on the matters specified in para 3 and 4 of the order to the extent applicable. Okay, right? We'll flip through some of these points as well as to what is there in CARO and how are those required to be looked at. Okay, maybe towards the end we'll pick up this CARO separately. Yeah, there are various, you can say, paras or requirements in this CARO for one to look at, right? Now, moving further, within the same section, CARO is not the only one. Okay, CARO, you can say, is one of the legal requirements. Other than that, there are various other requirements. For example, if you look at section 143 subsection 3, so that also requires auditor to report on what? We have sought, obtained all the information, explanations. Okay, proper books of accounts have been kept, standalone balance sheet, P&L, some of these statements, they are in agreement with books of accounts. Okay. Financial statements comply with accounting standards, right? Then there are requirements related to qualifications, disqualifications of the directors for which some undertakings are required to be obtained. Yeah. So similarly, there are different requirements. Then, if you look at this point number G, here again, what do we have? As per the requirements of section 143. Now, what do we have? See, the auditor is required to report on adequacy of internal financial controls, which is very commonly called as IFC report. Okay, report on internal financial controls. Now, we are not talking about all the controls. We are only talking about the controls in reference to the financial statements of the company. Okay, so we are talking about only that part, right? Now, in relation to that, now what do we have? Now, in relation to that, we are looking at the controls. And here again, because in relation to IFC, you can say auditor is required to sort of give an opinion. Okay, of course, we are talking about financial controls only. We are not talking about non-financial controls. But here again, you can say it's a complete report in itself, similar to this main audit report. You can say you have another report which is specifically dedicated to the internal financial controls. So there again, what will you have? Yeah, so there again, either you include this requirement within the main audit report. So that will again make this main audit report as too bulky and slightly confusing also, because there will be a lot of mix up. Yeah. So that's why, what do? This report on IFC is given separately. And this is made an annexure. Yeah. So this happens to be an annexure of the main audit report. So that's how it's put out, right? So one annexure of the main audit report was that CARO, so something that has been referred as annexure A. Then we have this annexure B, which is about the report on internal financial controls, right? Yeah. And then moving further. Now we are still on this section, report on other legal and regulatory requirements. We are still on the same section. Now here again, different legal requirements have been put down. Yeah. Okay. So now all of those requirements are required to be specified. For example, if you look at Rule 11 of the Companies Auditors and Auditors Rules 2014, there are some areas auditor is required to specifically comment upon. So those are included over here. Yeah. So if you pull down, you will see different requirements being mentioned over here. Okay, then you move further, you have this Rule 11G of the Companies Auditors and Auditors Rules 2014. So that is again put down. Yeah. So I would suggest you to read this audit report once. Okay. Because by reading this, there are two things. Okay. One, of course, you will get a clarity in respect of various requirements of the audit report. Second, you will also understand how to draft this. Okay, because sometimes you may be asked to draft a particular para of the audit report. Okay, so the way you draft it, the language you use, the references that you make, that you will get a clarity only once you start doing that. Otherwise, you will not get a clarity, right? So that's why I think this is good for you to look at. Okay. Then, what do you have? This report has to be in writing. See, the audit report cannot be an oral audit report. It has to be written. Doesn't mean that you'll use a paper and a pen. No. It has to be in hard copy. Okay. And who will sign this? Auditor. So first of all, you'll have the name of the firm, firm's registration number, name of the partner, membership number, date and place. Yeah. Then there is also a requirement to mention a unique code on the audit report called as UDIN. Now, there are some reasons as to why this UDIN is required. See, the report is required to be issued by a practicing chartered accountant. This UDIN is generated from the portal of ICAI. So that's why only a CA in practice who is registered over there can generate this UDIN. There's a time limit within which this UDIN is required to be generated and put down. Okay. So it will not happen that the report has been finalized and now the UDIN is not there. Without the UDIN, the report is considered to be invalid. Further, it acts as a proof. Why? Because only a CA in practice is issuing the audit. Otherwise, nobody else would be able to generate this UDIN. Yes or no? Okay. So now, so far what we have done is, we have discussed, you can say, some of the basic requirements. Not all the requirements we have discussed, right? Now we will add on to that. So let me just pick up one requirement that we talked about called as CAM, key audit matters. Okay. So let's understand about CAM. Now, what is CAM? What is required to be done in case of CAM? Now, what is CAM? Now, during the course of audit, what may happen? Auditor may come across a lot of areas, a lot of items. And some of those areas which he audits may be challenging. Some of them could be quite significant for the auditor to look at for his review, right? So there is a section in the auditor's report wherein the auditor is required to report those key audit matters. Now, let's try to understand the difference between a CAM and a modification. First of all, one should understand that something that we call as CAM, key audit matter, is not a modification. Okay, so it's not an observation of the auditor which is about a misstatement or which is about a material misstatement and which has not been adjusted or which has been adjusted. No, we are not talking about that. Okay, of course, it can be around those misstatements as well, but over here we are not talking about misstatements. And we are also not talking about modification. So one should not think that anything which is reported as CAM is a modification. No, that's not true. That's not a modification. So what is a CAM? See, CAM are those matters which are quite significant in relation to the audit. Okay, so let's understand this in a slightly different manner. Okay. So if we go back to the audit report, there were various elements that we discussed. Some of these elements we have discussed as to, what is required to be included there, right? Now, in relation to these elements or in relation to this auditor's report, actually, if you look at this report, this is quite standardized. Okay. There's a proper order in which various sections have to be given. And even if you look at the language which is used in the auditor's report, that is quite standardized. Yes or no? And which will remain same year on year. So except for the year, which changes each financial year, do you find any other change in the auditor's report? Answer is no. Yeah, so that's why there have been discussions in the past that the audit report happens to be quite boring at times because the user will get to see same audit report year on year. Okay, and during the course of audit, so if you look at some companies, the auditor may take 1 month for the audit. In case of some of the companies, the auditor may take 5 to 6 months. In some of the companies, the auditor may be auditing the financial statements throughout the year. Yeah. if you look at the audit, if you look at this audit process, if we talk about the challenges which the auditor may have faced during the course of his audit, there is no mechanism for the auditor to convey all of those aspects to the users. Yes or no? Do you find that? Answer is no, you don't find that. You don't see that happening. Okay, so that's why somewhere there was a discussion that as far as the audit process is concerned, so the users don't get to know anything about it as to what is happening in the company, if there is a problem, if there is not a problem, if there is a challenge. Okay, so the users will only get to see what outcome in the form of an opinion, whether it's clean or not clean. Yeah, something which was happening behind that report means as an audit process. So there was no communication around that to the users of the financial statements. And that is where this CAM comes into the picture. Now, what is the objective of CAM? So you can say it is trying to make the audit report a bit more interactive. Okay. It is trying to convey some of those requirements in relation to the key audit matters to the users of the financial statements. Now, what are those requirements? What are those criteria for the key audit matters? Let's understand. See, if there are some matters which required significant auditor's attention, there were some matters which were most significant to the auditor, matters that were communicated to TCWG, those anyways would be significant. Now, what are the matters that you communicate to TCWG? Auditor's responsibility, auditor's independence, planned scope, timing, significant findings. Of course, these are the standard ones. So do you include that in CAM? No. As around the TCWG, the significant qualitative aspects of entities' accounting practices that you communicate, significant difficulties that you encountered, significant matters arising during the audit that were discussed with the management, circumstances affecting form and content of auditor's report, other significant matters relevant to oversight of financial reporting process. Similarly, if there were some matters which required significant attention of the auditor, okay, if there were areas of higher assessed risk of misstatement, okay, if there were significant auditor's judgments, right, if there were some significant transactions or events, right. Now these are the matters, these are the areas which the auditor will have to analyze as to out of these matters which are the most significant one that need to be communicated to the users. Okay, or some of the matters which are of most significance. Why? Because those were quite significant in terms of materiality. Okay, that again one will have to understand in the context of the audit, in the context of the entity, the type of business they will have, okay, the types of issues the industry may be facing. Yeah, So some of these factors are required to be considered by the auditor to assess, to identify as to which of those matters will be considered as key audit matters. All right. Yeah. So you can say this will be one of the criteria, or these are some of the criterias for the identification of key audit matters. Now, while reporting these camps, what is it that the auditor will do? Yeah, so let's try to understand that. See, while reporting these camps, the auditor will have to report why the matter was considered. So first is why. Why the matter was considered as a camp. Okay. How the matter was addressed in the audit, which will be essentially a summary of the auditor's response to assessed risk. Okay. So for example, say inventory valuation. So what are the procedures which the auditor has performed on that? Okay. What was the closure of that? Right. A reference to the related area disclosures in the financial statement. So when you look at CAM, okay, so in that CAM section of the audit report, what will you find? You will find these three things. So why the matter is a CAM? So that discussion has to be there. What are the audit procedures which have been performed on that? Because the audit is now completed. It's forming part of the audit report. And the reference of that area to the financial statements. Yeah, so this is what you will see in case of CAM. Right? So now, let's go back to the audit report we were discussing. And within that audit report, we will try to understand some of these reporting requirements. Okay. Right. So if we look at CAM, what do we find? To begin with, auditor has explained key audit matters are those matters that, in our professional judgment, were of most significance in our audit of financial statements. These matters were addressed in the context of audit of financial statements as a whole. We do not provide a separate opinion on these matters. Okay, yeah. So now, auditor has first of all explained very clearly that these are significant matters. Further, one should not assume that we are issuing any opinion on this. No. So he's saying our opinion is on the financial statements only. These are the matters just for your understanding. Okay. So is this a modification of any sort? No. Right? No. Then comes the matter. So the auditor is talking about revenue recognition, and in respect of revenue recognition, he is not talking about entire revenue recognition. No. He is only talking about fixed price contracts, wherein the revenue is recognized using POCM method. Okay. So he has given a reference. So he's saying you can go refer notes 4A 10 to the financial statements. Okay, so he is given the reference of that note or the disclosure in the financial statements. Now CAM. Now what will happen? Now he will explain why this matter has been considered as a CAM. Okay, so let's read this. So the auditor says company engages in fixed price contracts. Okay, we identified revenue recognition of fixed price contracts as CAM since there is inherent risk and presumed fraud risk around the accuracy and existence of revenues. Then, application of revenue recognition accounting standard is complex and involves a number of key judgments and estimates in mainly identifying performance obligations, related transaction price, estimating the future cost to completion of these contracts, which is used to determine percentage of completion of relevant performance obligation. Further, he says these contracts may involve onerous obligations which require critical assessment of foreseeable losses to be made by the company. And at the year end, significant amount of the work in progress, okay, means the contract asset related to these contracts are recognized. So he has given the rationale, he has given the basis, he has given the answer to why it's a CAM. Okay, so the first question is why the CAM is a CAM. So that is what he has explained. Now, if let's suppose the matter is reported as CAM, which is fine, but because it's not a modification, so that means auditor has audited this. So auditor is saying it's complex, but I have audited. And basis my audit, everything is good to go. Okay. Now he says how the matter was addressed in our audit. Means what are the audit procedures I have performed. So he says our audit procedures included the following. What are those? Obtained an understanding of the systems, processes, controls implemented by the company for recording, computing revenue and associated contract assets, unearned deferred revenue balances. Then involvement of our IT specialist. Okay. Now, because the controls around it, the process as around the revenue recognition was based dominantly on the IT setup. So that's why what do? You'll have to engage the IT experts, correct? So he has explained that. Okay. So for doing what? For assessment of IT environment in which the business systems operate. Okay. For testing of system controls. For testing of IT controls in relation to, of course, revenue. Testing the controls pertaining to allocation of resources and budgetary systems. Yeah. So he has put down all the procedures. Then he says on selected specific and statistical samples of contracts, we tested that revenue recognized is in accordance with revenue recognition accounting standard, including evaluated the identification of performance obligations and the ascribed transaction price. For testing the company's computation of estimation of contract cost and onerous obligations, if any, we assessed that the estimates of cost to complete were reviewed and approved by appropriate designated management personnel, performed retrospective analysis of cost incurred, assessed the appropriateness of work in progress on balance sheet date, inspected the underlying documents and performed analytics to determine the reasonableness of contract costs. Okay, yeah. So now here again, it's not a selected procedures which are required to be put down. In respect of this particular area which has been reported as scam, the procedures which the auditor would have performed, okay, something that you'll see in the working papers of the auditor, that is what the auditor is also required to put down. Okay, clear? Now, there is a section which we call as scam. Now, other than this section, there's also a section that we talked about in our previous session. And what was that? Material uncertainty related to going concern. Now, please remember that this section, unlike various other sections that we looked at in the audit report, okay, title, addressee, subtitle, opinion, basis for opinion, auditor's responsibility, management responsibility. So these will always be included. Okay, CAM, other information. You'll always have these sections in the audit report. Of course, opinion will change to modified opinion, and accordingly, basis for opinion language will change, right? So this section, material uncertainty related to going concern. See, this section will appear only when there is material uncertainty. If there is no material uncertainty, is this section still required to be reported and commented upon? No. No, you'll not see that. Okay, yeah. So you'll see this only when there's a reporting requirement, right? Similarly, we'll talk about emphasis of matter and other matter paragraph. Those two sections will also be reported only when there is anything around that, otherwise not. Okay, as around the remaining sections, you will always see those sections appearing, huh? Right? Now what we can do is we can talk about modifications. So now in the audit report, what do you have? You have an objective. As an auditor, you need to ensure financial statements are free from material misstatement. What do? You give an opinion that is called as clean opinion, or wherein the opinion is not modified, right? But what if the financial statements contain material misstatement? What do you do? Yes or no? What if they contain material misstatement? What do you do? In such a case, audit report will be modified. Okay, yeah. So you can say the opinion which will be given will not be clean, that will be modified. Okay, so the modified opinion will have to be issued, right? Now, depending on the type of misstatement, depending on the information that is available to the auditor, modification could again be of three types: qualified, adverse, and disclaimer. So let's understand about these three types of opinions. In fact, we can look at this table. So this table, I think, very nicely puts down each and everything which is there in respect of modification. So we can say broadly there are two categories of the misstatements. See, either there will be a misstatement that is material. Of course, if the misstatement is not material, so does it lead to a modification? Answer is no. Yeah. So that means modification has to be material. Sorry, misstatement has to be material always. Only then it will lead to a modification, otherwise not. Right? Now, what if there is a modification, okay, which is, or I should say, in case there is a misstatement that is material and that is also pervasive. Now, what is the meaning of pervasive? See, pervasive means which has the impact flowing to entire set of financial statements. Means it is more severe, right? So the more severe form of this material misstatement, which is not limited to only one of the areas in the financial statement, which actually extends to, in a way, we can say broadly the entire set of financial statements. What do you call it as? Material misstatement and pervasive. Okay, material misstatement and pervasive. Now, depending on the type of situation that is there, what will happen? Type of modification will change. So this is one. Okay, so this is one way of looking at the modification. Other way is on the basis of the information provided to the auditor. See, there are two situations which are possible. First, the auditor is asking for the information and the management has provided all the required information. So we are not saying all the information. All the information auditor requires, management has provided. Okay. Now, if the management has provided all the required information and auditor finds there is a material misstatement, so auditor will say that this is the impact. Okay. Management doesn't want to correct that, which is okay, but information is provided and the auditor is able to compute the impact. So that's one way of looking at it. Other ways, auditor has asked for information and the management has either not provided that or is unable to provide that. Maybe the information is lost, documents are lost, they are damaged. Okay, so whatever be the case. Now in this case, what will happen? Auditor may not know the exact impact of any misstatement which could be there. So that's why what will he do? He will be looking at the possible effects. Now he'll not know the actual thing because he doesn't have the information. So he'll look at the possible impact. Yes or no? Yeah. So in case the auditor gets the information, what will he be able to comment on? Effects. If he doesn't get that, he will be talking about possible effects. So the language which he'll use will also be the possible effects. Now here again, depending on the situation the auditor is into, whether he gets the information, his opinion will be different. Where he doesn't get the information, his opinion will be different. Now, let's talk about a situation wherein the auditor is getting the information. Okay. So where the auditor is getting the information. So let me just call it as situation A. So information is received. Okay, I'm calling it as information received. Means everything he asked for has been provided. Now in this case, if the misstatement is material but not pervasive, what will happen? Qualified opinion will be given. But if the misstatement is material as well as pervasive, what do you do? We will move from qualification to adverse opinion. So it's more severe. Other situation is, see, the information he has asked for is not provided. So he has not received the required information. Now in this case, if he hasn't received the information, so what will he do? He will look at the possible effects. If he believes possible effects are going to be material, but they are not going to be pervasive, so what will he do? Again, he will give the qualified opinion. But if he believes that the impact will not only be material but also pervasive, so he will move from qualification to disclaimer of opinion. Okay. So now we can say in a way whether information is provided or not provided. If there is a material misstatement and that is not pervasive, so what is the type of modification you will have? It will always be a qualification. It will always be a qualification. But in case the misstatement is material as well as pervasive, okay, misstatement is material as well as pervasive, therein what will happen? Therein what will happen? In case the information is provided, it will be adverse opinion. Otherwise, it will be disclaimer of opinion. All right. Yeah. So what we will do is we'll also look at some audit reports with the qualified opinion, with the adverse opinion, with the disclaimer of opinion. Okay. So I think you will get slight more clarity as to what is the meaning of pervasive. Okay. What is the approach? How are all of these things impacted due to this? So I think we can maybe now take a break, and of course we are left with a lot of things, a lot of questions to practice, which we'll pick up after the break. Right, Manish, we can take a break now, huh? All right, thanks. All right. All right. So let's move on to the next part. Now, there's another section in the audit report wherein modification is not given. Okay. But if let's suppose there's anything which the auditor wants to highlight, why? Because let's suppose there's an important matter which the auditor wants the user to look at. Okay. That matter is already reported in the financial statements. It may be recognized, it may be disclosed therein. Yeah. But that area, that matter is of significant importance to the users of the financial statements. That is so important that it is fundamental to users' understanding of the financial statements. Okay. In such a case, what will happen? In such a case, auditor will want to highlight that. Now, where do you highlight that? In the financial statements? Answer is no, because financial statements are already they already include that area or the matter. So now auditor will want to address this somewhere in his audit report. And that is where a section is included in his audit report, which is called as EOM. Emphasis of matter means he will want to emphasize on that matter. It doesn't mean that he is trying to qualify that matter. No. Now, what is the objective? Objective is very simple, that all the users who are reading the financial statements, so when they will look at the audit report, okay, so the auditor just telling them in a way that this is important for your understanding. That's it. It's not modified, but it's important for your understanding. Yeah. For emphasis of matter, I think one thing you'll now understand, which is sort of linked, okay, and which is sort of essential, that emphasis of matter is only possible for their means something which is reported in the financial statements can only be emphasized upon. Yes or no? So if there is nothing in the financial statements, can the auditor emphasize upon that? Answer is no. So that's why for emphasis of matter, it is very, very important. Or you can say it is essential to have a reference of that matter in the financial statements. Yeah, because when you look at the emphasis of matter paragraph, therein the auditor will not elaborate. He'll not explain the matter. He'll not discuss in detail as to what are the problems or what are not the problems, what's the matter all about, why it is so significant. He'll not do that. He will just simply give a reference. He'll just simply say that there is a matter in the financial statement, you go and refer that. That's it. Okay. As regards its explanation, its significance, why is that important, why is that not important, all of those details, where will the user find that? They will find that in the financial statements, not in the auditor's report. That is not the expectation. In fact, that is not something which the audit report should do. Why? Because otherwise it will be a sort of duplication, because it's something is there in the financial statements. You are again repeating the same aspect with the same level of detail in the audit report. It doesn't make sense. Okay, it's all about highlighting that point, not about repeating that point. Okay, so this is one. Next is about other matter paragraph. Okay, now what is this other matter paragraph? See, if let's suppose there is anything in the financial statements which the auditor wants to highlight on, so he'll use this EUM. But if let's suppose there is anything related to the financial statements, anything related to the audit of financial statements, where again auditor wants to highlight something, okay, but that something is not there in the financial statements. So how will he do that? Can he now go and choose this EUM? No, he can't do that. Right? He can't do that. It's not there in the EUM. So how will he do that? That is where auditor will take the help of this another section, other matter paragraph. Okay. So other matter paragraph, you can say, is a section for those areas, for those matters, which again auditor wants to highlight, but for which there's no disclosure. There's nothing as around that in the, excuse me, in the financial statements. Okay. For example, we can take an example here. Say in the current year, let's suppose in the current year, '25, '26, which is also the reporting year, ABC and company has been appointed as the auditor. Okay. Last year, financial statements were audited by P and company. Last year, financial statements were audited by P and company. Now, in this case, during the year, this 25, 26, when ABC and company will audit, so in the financial statements, there will be two periods, 25, 26 and 24, 25. But this 24, 25, will that be audited by ABC? No, that is already audited. So that's why what ABC would do is ABC would specify in his audit report that the previous year's financial statements were audited by some other firm. Okay. Now, in relation to this matter, is there any disclosure requirement? Do you see anywhere in the financial statements this matter should be disclosed by the company? No, there's no such requirement as far as the financial statements are concerned. But do you think it is important for the users of the financial statements to know this, that last year it was audited by somebody else, now it's a new auditor? Yes, of course, it's important. So how will you do that? Emphasis of matter you can't choose. Other matter paragraph is what you will pick up. Okay. Yeah, so this is again an example of how do you use this. Clear? Yeah. All right. So now, as around this emphasis of matter, other matter paragraph, here again, we can just look at some audit reports as well. but we'll just try to look at those audit reports maybe slightly later. What we can now do is we can just pick up some questions. Okay. Some questions around the concepts we have just discussed. So just give me a minute. I'll move on to the questions now. All right, so I'll share the document. Okay, so below is draft extract of audit report of a listed company. Now, you should also try to understand the type of questions you are going to get. Okay. So draft extract of audit report of a listed company is given. So para A below reflects certain matters stated in audit report communicated with CFO of the company. Para B is in the nature of auditor's response to said matter. Okay, first of all, there is a matter, then the procedures. So what is the matter? Company recognizes revenues when the control of goods is transferred to the customer at the net consideration which the company expects to receive for those goods from the customers in accordance with the terms and conditions of the contract. The terms of sales arrangements based on the terms and conditions of relevant contracts and nature of discount and rebates create complexities that require judgment in determining revenues. Okay. Now, in relation to this matter, let's understand what is it that the auditor has done. Means what are the audit procedures? Okay, so when you say auditor's response, so that means the procedure only. Yeah? Okay, so now auditor says we read the company's revenue recognition policy and assessed its compliance in terms of Ind AS 115. We assessed, design, tested the operating effectiveness of internal controls related to sales and rebates discounts. We tested on a sample basis that the revenue has been recognized in proper period with reference to supporting documents, including confirmations from customers. Okay, so you can say that these are the procedures which have been performed. All right. Now, from the above description, identify what auditors are trying to report and under what heading such matter should be reflected in the audit report. Over to you. Any thoughts? Yes. Any thoughts? Yes, Saminathan, please go ahead.
Yes, sir. Good morning, sir.
Good morning.
Here, that auditor would like to discuss this matter under key auditor matters, sir.
Right.
The reason is that this is one of the item is a complexity in nature, as informed and discounted and involved, and terms and conditions in the contract and nature of discount and everything is on a high level. So
Right.
the auditor, if he feels this matter as a most significant matter, and
Right.
this matter can be discussed with that those charged with governance. After that, he can provide this information under the key auditor matter, elaborating what is the what is the key auditor matter, why he considered, and uh, and reason for audit procedure what he followed.
Yes.
Those matter he has to communicate if he, based on his judgment, to give the cumulative communicative value to the users for this understanding
Right.
in that way he can. And also this matter is not modify the
Okay.
opinion. That point
Right.
also he used to mention it while here giving the KAM.
Okay. Very good. Now,
Yes, it can be included in KAM.
right. Very good. Now, when you look at the requirement of the question, okay, so now what is it that the question is asking you? Identify what is your auditors trying to report. So basically, they are trying to understand that which section of the audit report is this. So a discussion around it. Now, if you go back to the question, see, it says that in the audit report, auditor has put down the audit procedures. So what are these? Audit procedures. Now, if you go back to our discussion on various sections of the audit report, okay, in all those sections of the audit report, where is it that you find the audit procedures? Only one section. And what was that? CAM. Yes or no? Because no other section requires, or in fact allows, audit procedures to be specified. So that's why very clearly, what will you get to know? CAM. And the moment you get that, I think it's very simple for you to answer this. After that, what will happen? We'll have to just put down all the aspects related to CAM again with the reference of the matter which is there. Yes or no? Right? Now, in this case, the above matter is in the nature of CAM and should be stated under the heading CAM in the audit report. CAM are those matters that, in the auditor's professional judgment, were of most significance in the audit of financial statements. CAM are selected from matters communicated with TCWG. Okay, so SA 701 states that auditor shall determine from the matters communicated with TCWG those matters that required significant auditor attention in performing the audit. In making this determination, significant auditor judgments relating to areas in the financial statements that involved significant management judgment, including accounting estimates that have been identified as having high estimation uncertainty to be taken into account. Okay, so the above described matter relates to revenue recognition and creation of complexities requiring judgment in revenue. Yeah. Further, the description also describes how the matter was addressed by the auditor by performing various procedures. Yes or no? Next, PTD Limited is engaged in the business of executing construction contracts for its clients. There are non-current receivables outstanding in the financial statements of the company as at year end. Such amounts represent caused by claims raised by the company on its clients relating to cost overruns necessitated due to client delays, change in work specifications, and related matters. Yeah. Based on the negotiations, the company has also gone for arbitration in some of the said cases. The management of the company has considered the above amounts to be fully recoverable, and this is also stated in the notes to accounts. CA Piyush, auditor of the company, has relied only upon management representation in this regard. Okay. Now this is important. Relied only upon management representation in this regard. Besides, he has decided to include said matter in EOM para in the audit report. How do you view decision to include the above matter in EOM para by the auditor of the company? Over to you. Do you think this EOM matter or this EOM is appropriate? Okay, so for this matter, when the EOM has been given, do you think that's appropriate? So in the light of this requirement that is there for EOM, you need to talk about it.
Yes, sir.
Yes, please go ahead.
So, SCA 706 is talks about emphasis of matter and other matter paragraph for reporting. Here, the thing here, the receivables around 500 crores are
Right,
outstanding more than there are some arbitration, arbitrate situation also. Some distributors are there, which
right,
means that is what the arbitrate is involved in this matter.
right,
So he received the communication, the written representation as per SCA 580, stating that, but he relied only upon that written representation is not appropriate.
right,
Since the matter is involved, amount is 500 crore, and he has to get the sufficient and appropriate audit evidence whether
right,
it is the receivables 500 crore is correct or not. First, he
right,
has to obtain that.
correct,
Then if he get that evidence is appropriate,
right,
then definitely since this matter is also is disclosed in the financial statement as notes to account, he can provide in the emphasis matter paragraph stating that if there is only the no disqualification is required,
right,
nothing is there is no unmaterial material misstatement if he found, then such situation he can provide definitely emphasis matter paragraph he can provide. Otherwise,
right,
what will happen if there is a material uncertainty upon the review of that matter 500 crore during this audit procedure, he found anything is material misstatement which is not pervasive, then go for the qualified opinion. Otherwise, he can it will be issued that adverse opinion if it is a pervasive nature. See,
okay,
it depends on the situation and the analysis only, sir.
okay. But do you think emphasis of matter paragraph which has been considered in the given case is appropriate?
Yes, it is appropriate. It is appropriate because the management already disclosed as a notes to account. See,
Right,
when there is a disclosure in notes to account, when it is presented in the financial statement, only those
right,
information, if the auditor feel is the fundamental to user to understand
right,
further, to
right.
emphasize the matter into in this report, he can very well he can communicate that via
Okay,
emphasis matter paragraph.
all right, okay. So now let's look at this. Where do we include emphasis of matter? Wherein we want to highlight that anything which is there in the financial statements, which we want to highlight. If let's suppose we are the auditor, we want to highlight, but we don't want to modify that. Okay, so we find there is no material misstatement, but something which is important for the users to understand. That is where EOM is included. Yes. Okay. Now, in the given situation, what has happened? Auditor has only, now this was important. Auditor has relied only upon management representation letter. So it seems he has not performed any audit procedure. And we have talked about representation letter also. Representation letter is not a conclusive evidence. Right? It's not a conclusive evidence. Okay. He has not performed any other audit procedures like verifying the contracts with the customers, status of arbitration proceedings. So can we say that his procedures are appropriate? Answer is no. Performing the necessary audit procedures may lead the auditor to conclude that the modification in the opinion is necessary. In such a case, can we say that EOM is appropriate? Matter cannot be included in EOM. So what should the auditor do? Form his opinion by performing the required audit procedures. Even if you don't perform the procedures, if let's suppose, or even if we say the procedures are performed. So in the given case, what is the matter? We have a receivable of 500 crore. Now, as regards this receivable, either it will be collectible or not collectible. Is there any need to highlight this in the audit report? Answer is no. What is so fundamental in those receivables? Nothing. It's like any other line item in the financial statement. So why would you want to highlight that? There's no point highlighting this at all. The only thing is that either this receivable is all right, or we say there is a problem. Problem is not collectible, in which case there should be a provision which the management may not have done, which should result in a modification. Okay. So in the given case, the only thing is what? Either the opinion should be clean or modified. This EUM doesn't fit into this at all. Yes or no? It doesn't fit into this. So that's why there are two concerns. One, non-performance of procedures, which is the biggest concern. Second, to include unnecessary EUM. See, EUM doesn't mean that you can just go highlight anything. Okay. You'll go highlight something which requires to be highlighted, which is of fundamental understanding. So any line item which is there in the financial statement, whether that is material or immaterial, that is not something you'll call as fundamental. Okay, that anyways the users will be reading. Okay, yeah. Next, ADKS and company LLP. Now it's a LLP. So that means we are talking about the auditor, correct? So they are the newly appointed statutory auditors of PKK Limited. So what is the name of the company? PKK. So this is the client. ADKS and company LLP are the auditors. During the course of audit, statutory auditors have come across certain significant observations which they believe could lead to material misstatement. Management has a different view. Okay, so the matter is not given. The only thing which is given is the outcome in a very generic manner. Certain significant observations leading to material misstatement. Okay, management has a different view. Okay, now considering this, statutory auditors are determining as to how to address these observations in terms of their reporting requirements. Please advise. Over to you. What are your thoughts? What do you do?
Yes, sir. Here it's very clear that certain significant observation auditor is believe that there is a material misstatement.
Okay,
First of all, he has to identify whether it is a material misstatement is there, whether it is a pervasive or not.
right,
That is one part.
right,
Then whatever he identified, he has to discuss with the management.
right.
Then if they are able to correct that in financial statement and correctly advised in the financial statement,
Right.
then there is nothing to report. He can issue the if the matter is corrected, then fully is agree with the financial, then there is no issue. Then if the management is not ready to correct it,
Hmm.
and if he found the material uncertainty, material misstatement is there, definitely he can qualify the matter in the reporting. If it is a material and pervasive, then definitely he can think about the information is received.
Hmm.
In that case, it is a adverse opinion. Then
Hmm.
if it is a the information is limited or not received, he not audited those items, the possible effect of that uncorrected misstatement is there in the material and pervasive, then in that case he can go for the disclaimer of opinion. But
Okay.
these will be formed upon the discussion and the material misstatement that effect. Based on that only he can give for the conclusion.
Okay. All right. Good. So now I think this question is more of generic, and that's why it's not very case specific. It more of requires you to guide as regards the reporting requirements. Correct. But because we are talking about material misstatement in the given case, so that's why we'll not be talking about all the reporting requirements. We'll be talking about the reporting requirements which you'll have when it's a modification. Okay, so what are those? So either the information is provided or not provided. Remember those situations we discussed? In both the cases, if the impact is material but not pervasive, so what will happen? Qualified. Okay. But if the impact is material as well as pervasive, then it will be either qualified opinion or disclaimer, depending upon whether the information is provided or not provided. That's how it will go. Correct? Now, depending on the requirement, depending on the situation the auditor is into, he'll have to choose amongst these three modifications. Okay. Now, again, do we know through the facts of the question as to which situation the auditor is into? No. So that's how you'll have to look at it. Right. Another situation could be that auditor becomes aware that the management has imposed a limitation on scope. Okay. For which the auditor will also go and talk to TCWG. If there's no limitation scope, it's a material misstatement. There again, auditor will go and communicate that to TCWG. Right? So this communication factor is another part. So one is the audit report, which has to have some of these points. And the other thing is that before doing that, this communication with TCWG will also be a consideration on the part of the auditor. Right? So let's look at this next one. TUV is engaged in the business of manufacturing spare parts. Saroj and Associates are the auditors of the company. During the audit, CA Saroj noticed the company had a major customer, namely Korean Mart from South Korea. Owing to an outbreak of war and subsequent destruction leading to government ban on import and export in South Korea, the demand from Korean Mart for the products of TUV Limited ended for an unforeseeable time period. When discussed with the management, CA Saroj was told the company is in the process of identifying new customers for their products. CA Saroj understands that, though the use of going concern assumption is appropriate, but a material uncertainty exists with respect to identification of new customers. This fact is duly reflected in the financial statements. Means appropriate disclosure is given. How should CA Saroj deal with this matter? Over to you. I think it's fairly simple. Very much on lines.
Yes, sir.
Right? We discussed in the last session. Yes, please go ahead.
Yes, sir. As per SCA 570 going concern, is talk about uh, the here the situation. See, as SCA 570 is talk about when there is a going concern is appropriate,
Right.
and when material uncertainties exist, and also disclosed this matter as appropriately in the financial statement by the management.
Right.
Then the auditor responsibilities for reporting matter on this, as per the SCA 700s, the reporting, he has to incorporate one paragraphs called material uncertainty relating to going concern. In
Right.
that paragraph, he has to provide this information, so and so, and discuss that, and not modified
Right.
the opinion.
Right.
That also he has to. Yeah, this is what.
Okay. Very good. I think over here, disclosure is not a problem. Right? So when the disclosure is given, okay, so now what will the auditor do? Simply highlight that. But for highlighting this, will he choose this path of EOM? No. There's a separate section similar to EOM which says material uncertainty related to going concern. So that is something which the auditor needs to include. Okay. And while doing that, he will also clarify that he is not expressing an modified opinion. His opinion is clear. Yeah. So that's something he'll specify. Clear? Next. Sunmoon Limited is a power generating company which uses coal as raw material for its power generating plant. Company has been allotted coal blocks in the state of Jharkhand and Odisha. During the financial year, a scam regarding allotment of coal blocks was unveiled, leading to a ban on allotment of coal blocks for various companies, including Sunmoon Limited. This happened in the month of December, and as such, entire power generation process of Sunmoon came to a halt. Okay. during that month. As a result of such ban and the resultant stoppage of the production process, many key managerial personnel of the company, they have left. There were delays in the payment of wages and salaries, and the banks from which the company had taken funds for the project financing also decided not to extend further finance or to fund further working capital requirements of the company. Further, when discussed with the management, statutory auditor understood that the company had no action plan to mitigate such circumstances. Okay. Further, all such circumstances were not reflected in the financial statements of Sun Moon Limited. What course of action should the statutory auditor of the company consider in such situation? Yes, over to you.
Yes, sir.
Yes.
Sir,
Yes.
as per SCA 570, again this matter involved in the 570 going concern.
Right.
When there is a going concern, is there is a is not appropriate,
Right.
and there is a material uncertainty is
Right.
involved, then if the management is management is properly disclosed in the matter, then
Hmm.
definitely he can provide the qualified opinion.
Right.
Otherwise, no, it's not appropriate disclosed, then definitely disclaimer, straight away disclaimer of opinion as per SCFI 70. But here in this situation, in this question, there is a government, there is the blocks of various component of the the business also is halted, and the
Hmm.
key persons, managed person also left from the company, and the
Hmm.
wages is not paid on time, and there is the financials also is stopped, there was no further extension. These are the indicator of that there is a
Right.
problem of the company, will whether it will run in the foreseeable future or not. There is a question for all these things. It is a clear evidence that the going concern assumption is impacted. So since it is a, there is no appropriate going concern is not appropriate, and also the material uncertainties exist, and the management is not properly disclosed this matter in their financial statement, the auditor definitely he can give the disclaimer of opinion in this matter, in this
Right.
audit report
All right. Great. So let's look at this. SA 570 again is the relevant auditing standard for us to look at. Now, what are the responsibilities of the auditor? Okay, that is again same thing, to obtain sufficient appropriate audit evidence. Yeah. So now here again, what do we need to assess? Going concern basis, whether that is appropriate or not appropriate. Okay, so if material uncertainty is there, disclosure. Okay, so similar sort of guidance you'll use in the given situation. Now, what are the facts? Following circumstances indicate inability of Sun Moon Limited to continue as a going concern. Right? 1. Ban on the allotment of call blocks, halt in power generation, KMP leaving the company, banks decided not to extend further finance, not to fund working capital requirements, non-availability of sound action plan to mitigate such circumstances. Correct? Therefore, it is clear that the going concern basis is inappropriate. Okay. On the basis of the fact pattern, what do you find? These circumstances are not even reflected in the financial statement. Means the management is not making a communication. So therefore, what will happen? If the going concern basis is inappropriate, then the requirement is very simple. Bring the balance sheet to its NRV. Forget about the historical cost. Is that done by the management? No. So that means there is a material misstatement which is also pervasive. The moment you say there is a material misstatement which is also pervasive, what does it require? Adverse opinion will be required. Correct? Adverse opinion will be required. Right? Further, auditor is also required to report the same in CARO. Yeah, because there's a clause in CARO that on the basis of financial ratios, aging, expected dates of realization of financial assets, payment of financial liabilities, other information accompanying the financial statements, auditors' knowledge of board of directors, management plans, whether the auditor is of the opinion that no material uncertainty exists. Okay, that the company is capable of meeting its liabilities existing as at the date of the balance sheet as and when they fall due within a period of 1 year from the balance sheet date. All right. Yeah. Next. CA Omkar is the statutory auditor of Sabhyata Limited for the financial year 23-24. The company is engaged in business of manufacturing of floor tiles. During the audit, CA Omkar obtained certain audit evidence which were not consistent with the affirmation made in the financial statements. Okay, so let me just bring it on one page. Okay, so now they have received some audit evidence which is not consistent with the affirmation made in the financial statements. Now, it's a sort of tricky situation for the auditor to deal with. So tell me, if you were the auditor, what is it that you will do? Over to you. In the given situation, what
Yes,
will you
sir.
do? Yes.
Yeah. Yes, sir. As per SEO 705,
Right.
the modification of opinion,
Yes.
here, when the auditor is able to obtain that audit evidence, but which
Right.
were not consistent, the affirmation made in the financial statement, then definitely he can, whether it is a material misstatement, whether it is a pervasive or not pervasive, that aspect he has to look into it, and he has to discuss
Okay.
with those charged with governance as well relating to this matter. Then if there is, if the evidence, sufficient and appropriate audit evidence, when he find this is a material misstatement is there which is not pervasive, then
Hmm.
he can put the qualified opinion. Otherwise
Okay.
he can, otherwise it will be the adverse opinion.
All right. Great. So let's look at this. Now we are talking about some inconsistency. Okay, and it appears to be a critical matter anyways, because otherwise small matters will not be a focus. See, if there is something inconsistent, it somewhere reflects possibility of a misstatement which could be material, right? That is for the auditor to look at, not for the auditor to find out. In the given situation, what is it that the auditor should do? So CA Omkar should modify his report looking at the requirements of SA 705. Okay. So either to go with a qualified opinion or an adverse opinion. Yeah. Depending on again as to how severe is the matter. Okay. Now, Next, Neptune Limited is a company that holds significant investments in a portfolio of equity securities. Due to a decline in the market value, company's investments have suffered a notable diminution in value. For the financial year ended 31st March 23, audit report of Neptune Limited included a qualification regarding non-provision of rupees 70 lakhs for the diminution in the value of these investments. As the auditor for the financial year 23-24, so now we are talking about next year. So if you look at year ended 31st March 23, audit report was qualified, right? Now, if you look at next year as an auditor, how would you report in the following situations? So two situations are given to you. How would you report? One, if the company does not make a provision, so if the company doesn't go with the provision, so what will you do? If the company makes an adequate provision, yes, your thoughts. Over to you.
Yes, sir. Yes. Um, this is as per SEA 710.
Hmm.
It talks about the comparative information and the
Hmm.
financial statement.
Hmm.
When the comparative figures are there, the previous year is audited and the auditor is concluded that there is a qualification since the non-provision of that 70 lakhs rupees.
Right.
And he provided that qualification is correct only.
Hmm.
On the subsequent year when he audit the new that auditor is
Right.
2023-24,
Hmm.
the company still that the provision is not done, then
Right.
again with respect to this matter he can provide the qualified opinion on this matter.
Right.
And the point number two, that two talks about if the companies makes adequate provisions for
Hmm.
this, then the auditor has to check that provision is adequately presented or not. Based on that, definitely he can give the clean report on this if that properly eliminated.
Very good. So now I would put it in a very simple manner. So if let's suppose there was a qualification in the previous year, and of course that must have been a material misstatement, so that's why it was a qualification. Now, if the management continues with that misstatement, so what do you do? Auditor will continue with the qualification. As simple as that, right? However, if the management is ready to create the provision, so that means the misstatement is gone. Yes or no? Yeah. So if the misstatement is gone, so should the auditor continue with the qualification? No. So then the qualification will go away. Okay. Then it will be a clean opinion, right? Next, during the course of audit of PEC Limited, CA Guru has reason to believe that a fraud involving rupees 75 lakhs has been committed in the company by its employees. Okay, that a fraud involving rupees 75 lakhs has been committed in the company by its employees. Is CA Guru under the statutory obligation to report the above matter to the central government? How should he proceed to report the above said matter? Over to you.
Yes, sir. Here there is a fraud involved, the 75
Right,
lakhs. As per SCA 240, he has to deep dive into the matter. How, what is the reason? What is the factor? Now he believed that 75 lakhs is there.
correct.
Upon the he found out the immediately 75 lakhs, he
Hmm.
has to within 2 days
Hmm.
he has to report to the those charged with the governance or audit committee as appropriately.
Correct.
and he has to wait for 45 days for his reply,
Hmm.
and appropriately they can disclose this matter in the audit report once the
Correct.
matter is resolved.
Correct.
But when the amount involved is 1 crore or more,
Right.
then that situation, then auditor, as per the section 143 subsection 12, he has to report to the central government at form number ADT4.
Right.
But since in this case the amount is less than 1 crore, there is
Hmm.
no requirement to report this matter to the central government.
Okay. Great. So now this is all about reporting of the fraud. So we understand that if the amount if the amount involved is 1 crore or more, so that is when you eventually escalate this. Okay. So now in the given case, the amount involved is less than 1 crore. So therefore, he is under no statutory obligation to report this matter to central government. Yeah. But in the given case, the reporting will definitely be required to TCWG. That's one, or maybe internally. Plus, the reporting under CARO will also be applicable. Okay. Next, discuss the reporting responsibilities of statutory auditor in the following situations for the year 23-24 under CARO. Kendi Limited decided to upgrade its registered office located at Prime Spot in Bangalore. As a part of this upgrade, company sought to acquire adjacent plot of land owned by Mr. Siddhant, who is also a director of Kendi Limited. Initially hesitant to sell, Mr. Siddhant was persuaded to transfer his property to the company in exchange for a larger plot owned by Kendi Limited. This plot, located on a nearby street, is double the size of Mr. Siddhant's land. Satisfied with the exchange, Mr. Siddhant agreed to transfer the property, and the exchange was formalized in a deed executed by the company's authorized representatives and Mr. Siddhant. The registration of the properties was completed by 31st December 2023. Yes, so let's talk about it one by one. So now, in respect of this matter, what do you think are the reporting requirements under CARO? So this is only relevant from CARO's perspective, because you are only required to look at it from CARO's perspective. You are not going to look at as to how would you deal with this matter in the main audit report. It's only the CARO. Yeah. So in the exam, you need to be careful. Huh? If there is a specific requirement, you only need to comment on that specific requirement. Yes. So what do you do in this first situation?
Yes, sir. The cargo as per the Companies Act 2013, 143 subsection 11,
Hmm.
it's the CARO, the requirement as per the paragraph number 3 of the CARO 2020, it talks about this. There is a
Hmm.
clause number 15,
Hmm.
whether the company has entered into any non-cash transaction with the director or person connected with him.
Hmm.
So the provision of section 192 it will attract, sir. In this case, it is stated in the question that the the land owned by Siddhant and the director of the Gandhi and sells to the pursuant to so and so. It's related to the non-cash transaction.
Okay.
It has to be reported under the clause number 15.
Right. So let's look at this. In case the company has entered into any non-cash transactions with the directors or persons connected with him, and if so, whether the provisions of section 192 of the Companies Act have been complied with. Okay. Further, in relation to the transactions with the related parties, whether they are in compliance with section 177, 188, okay, along with the details. Now, in the given case, Candy Limited has entered into non-cash transactions with a director, okay, which is in respect of property. So therefore, the auditor is required to report the same under CARO, under which clauses, of course, it is 15 and 13. Right? Now, let's look at the second one. On 15th May 23, here again 23, 24, a TDS survey was carried out in the premises of SSO Industries Limited as per income tax. Survey team pointed out certain lapses regarding non-deduction of TDS, and subsequently Deputy Commissioner of Income Tax TDS raised a demand of 25 lakhs on the company, treating it as assessee in default. Company has not deposited demand raised and filed the appeal against the impugned order on 1st March 24. Right? So now, in the given case, do you think there is any reporting requirement under CARO? Over to you. Any reporting requirement you believe is there under CARO?
Sir, here the survey non-TDS is not deducted,
Right,
and the demand 25 is company treating as assess is default. The
right,
company has not deposited and raised and filed the appeal
right.
against the
Okay,
sir,
so it's a disputed demand.
yeah, disputed. Okay, if it is a disputed demand, see, we have the
Disputed
as
demand
per
means
para.
something which is under dispute, means for which the
Yeah,
litigation is. See, there are two ways. Either the company can accept or the company will not accept. So it seems
okay,
it's not accepted. So the company got into a litigation. So what do you call it as? A disputed demand.
yes, sir. As per the clause number 7 of
Hmm.
the CARO 2020,
Hmm.
there are two sections, whether the undisputed discharge reduce and the disputed. This is point
Right.
number B. There is only two is there. In
Hmm.
that case, here is a disputed. There is a dispute. Then
Hmm.
amount involved and
Hmm.
where this particular matter is there.
Hmm.
That point alone has to be reported under the CARO, sir.
Okay. Great.
Here the amount is 25 lakhs,
Correct.
and that the authority has to report it.
Correct. Very good. So wherever the statutory dues have not been deposited on account of any dispute, so the amount involved and forum where the dispute is pending, they are required to be reported in CARO. Right? So in the given case, what will happen? It should be reported under this clause 7 as to what is the amount involved, what is the matter, and the forum where the matter is under litigation. Right? Next. Fancy Limited is a foreign company providing software support services having its branch office at Delhi. During the year 23-24, it incorporated a subsidiary, Nancy Private Limited, in Gurgaon. For furtherance of objectives, Fancy entered into a business transfer agreement dated 5th October 23 with Nancy Private Limited for transfer of all assets and liabilities along with business of Delhi branch to Nancy on a going concern basis effective 1st April 23. Further necessary approval from regulatory authorities is also received on 20th December 23 for such a transfer. Fancy Limited promised that it shall provide continuing financial and operational support to Delhi branch, and further confirmed that any losses incurred post the date of transfer shall be borne by Fancy Limited. During the year 23-24, Delhi branch of Fancy Limited have prepared its financial statements on the basis that branch office does not continue to be a going concern, and all its assets are carried in the books of accounts at the values likely to be recovered at the time of closure of operations, to the extent ascertainable at the time of preparation of financial statements. Delhi branch has incorporated above matter in detailed form in notes to the financial statements. You are the statutory auditor of Delhi branch of Fancy Limited for the reporting year 23-24. According to you, Delhi branch has correctly disclosed the matter in the notes to the financial statements regarding management's intent to close the operations of the branch office. Further, you have obtained sufficient appropriate audit evidence concerning the audit, and you are on the verge of finalizing the audit report. You are required to draft a suitable opinion paragraph and basis thereof in the given case, along with the disclosure of note with suitable place in the audit report in terms of relevant auditing standard. Over to you. What do you think you should do?
Sir, here again that SCA 570 going concern. Here, when there is a going concern is appropriate, and the many material uncertainties exist, when it is
Right.
properly disclosed, then
Right.
auditor will give the clean report.
Correct.
In this case, is clearly state that subsidiary company is the impact in the going concern, the analyzed and everything.
Correct.
But when the going concern, the concern is going to operate in the foreseeable future.
Right.
Here, the foreseeable future means at this 12 months period.
Correct.
In this case, it's very clearly it is that parent company is going to fund for that. That which means the going concern concept is exist.
Correct.
But having the consideration of this, they can give the clean report for this. The report
Right.
will be that opinion paragraph, and basis of opinion he can issue.
Correct. And I think we can look at this opinion and basis, though we have already looked at it through the actual audit report. But again, because at times you may have questions wherein you may be required to draft it. Okay. So when it comes to the opinion paragraph, okay, before that, what will happen? You'll have to put down the title, where do you address this, okay, subtitle, and of course, then you move on to the opinion. So how do you start the opinion? So you'll first of all say that you have audited the standalone financial statements of Delhi branch of Fancy. It's not the company, it's the branch. Okay, wherein you'll talk about all the components, balance sheet, P&L, cash flow, etc. And then you will get on to the opinion. Okay, it's a true and fair view, right? Now, what will be the basis? So in the basis, again, we'll have to specify all of those aspects. That as regards that basis, everything around the ethical requirements, auditing standards we have looked at, and you have the audit evidence. Next comes the emphasis of matter. Now what you will do is you draw attention to this note regarding Delhi branch office management's intention to close the operations of branch office, which are subject to regulatory approvals. Okay. However, it doesn't continue to be a going concern. Yeah. And the provisions have been made in the books of accounts for the losses arising or likely to arise on account of operations, including the losses on the realizability of current assets. But whenever you have this emphasis, you will have to remember, you need to specify that your opinion is not modified in that respect. All right. So with this, we can just conclude our discussion once again for today. Thanks everyone for your time and for this wonderful participation. Thanks so much. Manish, yes, we can close this now.